For years, sustainable finance was built on a pretty simple idea. Do good, and you'll get cheaper capital. But that era, well, it's over. Today, we're diving into a fundamental market shift that's completely redefining the future of green bonds. We're moving away from simple promises and into a world of verifiable proof.
Now, to really get what's happening, we first need to understand a key concept, the Greenium. Think of it as a financial reward, a pricing advantage that issuers got for funding eco-friendly projects. It was, for a long time, the absolute cornerstone of the whole green bond idea.
So, here's how we're going to break this down. First, we'll look at the original promise of the Greenium, then dig into why it's fading away. After that, we'll compare two really different strategies, look at what we're calling the great fracture in the market, and finally, lay out a clear path forward.
All right, let's start by rewinding a bit. Let's look at the original value proposition for green bonds, which was built on a really simple and honestly a very seductive logic. For the issuers, the companies and governments raising money, the Greenium offered a real, tangible financial reward. A discount like this, 0.25%, might not sound like much, but on a massive bond, it translates into millions of dollars in saved interest payments. That's real money that could be plowed right back into the business.
And this quote just captures the appeal perfectly, doesn't it? The whole logic was this perfect win-win-win scenario. Companies get cheaper funding, investors get to check their ESG box, and the planet gets more green projects. It was a model that really promised to smoothly and efficiently bankroll a global green transition.
But as we've said, that era is well and truly over. So now, let's get into exactly why this foundational premise is eroding all over the world. It really boils down to two big forces. First, you've got a classic case of supply and demand. The market is just flooded with so-called green bonds now. But the second force, and this is arguably the more important one, is a huge spike in investor skepticism. Frankly, they're just fed up with greenwashing. You see, as the market went from this small niche thing to a mainstream asset class, that early adopter premium just disappeared. And that makes it incredibly difficult for new issuers like Nepal to get that automatic pricing break. The easy win, if you will, is gone. But it is so crucial to reframe this skepticism. As the slide says, it isn't a bug, it's a feature. This isn't a sign the market is failing, it's the opposite. It's the market's own immune system getting smarter, becoming more sophisticated, and starting to purge the low-quality, vague stuff. Okay, so how does an emerging market survive in this new, more skeptical world? To really understand the options, we can look at two totally different case studies from the region.
On one hand, you have India. They went for massive scale, quickly building a deep, liquid market for green bonds. Then, on the other hand, you have Bhutan. Now, they haven't even issued a green bond yet, but they've built their entire national brand on unimpeachable environmental credibility, all based on independently audited facts. And the critical insight here is this. For a country like Nepal, the path forward isn't trying to compete on sheer size. That's a race it's just not going to win. Instead, the real strategic advantage lies in becoming the most trusted market, not necessarily the biggest one. This whole shift towards trust and proof leads us to a really critical point. The market for sustainable debt isn't collapsing. It's doing something more interesting. It's undergoing what we're calling a great fracture. It's splitting into two very different categories. And this slide just shows that fracture so clearly. On one side, you've got the old model, green-labeled bonds with vague promises and basically no pricing advantage anymore. On the other side is the new reality, impact-verified bonds. These are built on hard data and legal promises, and these are the ones that are going to command a real, durable premium. The implication here is just stark, and it's clear. The market will no longer pay a premium for good intentions alone. That premium now exists as a fee that's paid for certainty, for verifiable, audited, and transparent proof that you're actually having an impact. So let's see how all of these insights come together into a clear, strategic action plan for an emerging green finance market like Nepal's, a plan to capture this new premium. The focus has to shift. It can't just be about designing and issuing bonds anymore. The real work, the foundational challenge, is building the national infrastructure of trust and verification that will give those bonds their actual value in the first place. And this requires a non-negotiable, three-step plan. First, you have to mandate independent public audits of key impact metrics. Second, you have to build up your own local teams for monitoring and verification, so you have lasting credibility. And third, you have to leverage technology, things like public ledgers or blockchain, to provide radical, real-time transparency to investors. This evolution of the market from premium to proof, it's not a threat. It's a massive opportunity. It levels the playing field, and it allows smaller, more credible players to compete based on trust. So that leaves us with one final strategic question for leaders and investors. The premium is still there for the taking. The real question is, who is willing to do the hard work to go out and capture it?